Hello traders and investors, welcome back to the Trend Trader channel. In this video, we are going to be giving a weekly market overview. We'll be covering what happened during the week in the stock market. The markets that we're going to be looking at is the South African market, which covers the Johannesburg Security Exchange, and then we'll also look at the US market, which cover the different markets there. There is New York Security Exchange, there is also Nasdaq. So we'll be looking at those different sectors and looking at other sectors that can affect the market. As things stand, we're looking at this CNBC website. We can already see that in the US, some of the major indices were up. As you can see, the S&P 500, it was green. It is only the Japanese market that was down for the week, and then the VIX, which is the volatility index. But when you look at different countries, there are a lot of things that you can see. You can see that in the American market, some of the indices were green, like the Dow Jones Industrial Complex or Industrial Average. Nasdaq was also green, S&P 500. Even when you look at a European market, for the people that invest in the European market, you can see that the FTSE, which tracks the London Security Exchange, was also green for the week. The German index was green, the France index was green. Well, those are some of the common market, but there are a lot of other markets in Europe. Even when you look at Asia, we can still see that the Japanese index was red, but when you look at China, the Shanghai Composite, it was also green, and the Hong Kong index was green as well. And for the investors who invest in the Australian market, you can see that the Australian market was also green there. So overall, you can see that most of the market were green. So we will be looking at a couple of charts, but before we proceed, I would like to ask you guys, those who haven't subscribed, to please consider subscribing. And if you enjoyed this video, please smash that like button. And as always, if you have any comments or suggestions, please leave them in the comment section. So now we start by looking at the Dow Jones Industrial Average. One thing that you've noted, remember in 2022, most of the market were in a downtrend, but it seems like around October 2022, the Dow Jones Industrial Average, it started to find its bottom. As we see that until the end of 2022 and the beginning of 2023, it has been on an upward move there. So in comparison to other markets in comparison to other markets in the US, this one has been a leader. But one thing that you have to keep in mind, this is just an average of about 30 industrial stocks. It is not a representative of the full market, but you can already see that it is now at this resistance level. So once it starts to trade above this level, things are going to be a bit interesting, but it still needs to come back and recover that previous high there around 37,000 points. So this is the market that we are looking, but since it's just 30 stocks, it is not a market that we're interested in trading, but it is good to see the direction of the market, where the market is going. So one thing that we are usually interested in is the S&P 500, which is sort of a proper representation of the US market, even though it only represents about 500 companies, not all the companies in the US, just the top 500. Once again, we can see that this one has been on a downtrend. So depending on how you draw a trend line, you can always get biased information. But when you look at it, you can see that the market has been on a downward trajectory there, as you can see. So a proper trend line should at least pass 3 points. But here in this case, you can see we're starting at the body of that candle, but here it's covering the week and another week and another week. Yeah, like I said, some of the things in the market are subjective, they are not objective. So what we are looking at here, we can see that now the S&P 500 is around 4,000 points. So once it starts to trade above this level, then we will be confident that things are turning around in the US market. As you can see, other people may start to see things such as invest head and shoulders. Remember, a lot of things in the market are subjective, but what we like to see is that we appreciate that there was a lot of buyers coming into this market last week. So we are hopeful that the S&P 500 can then start to trade above 4,000 points, pushing all the way up to about 4,100 points. Then maybe we can start to see things turning around there, because, well, the reality is that nobody loves a bear market. And then also the Russell 2000, it covers the small caps in the US. We can see it also, it has been moving sideways. It has been just consolidating sideways there. After somewhere around October, it stopped falling. Something that we need to note, that pullback was actually higher than this previous low. So now we can start to see a series of higher lows. But what is missing, we want to see the market pushing up and then creating a higher, which will be higher than this high. Then that will give us a bit of a confidence that the market is actually turning around. But in terms of the small caps, because the Russell 2000, it tracks all the small cap companies. Well, the US market is huge, so a small cap is not something similar to what we consider small cap in South Africa. Most of these companies, they could be small caps, but with a market capitalization of greater than 1 billion US dollars. But it is encouraging to see that things are turning around a bit. And then you can also trade the S&P 500 and the Nasdaq using ETF. So the QQQ ETF, it's an ETF that tracks Nasdaq. It also has a low total expense ratio. I think it's 0.1%. So it is a good ETF that you can use to track the S&P 500 and the Nasdaq. In this case, this is the Nasdaq ETF. Then the SPY is the S&P 500 ETF, because if you look at the prices, the S&P 500 ETF, it's about $400, and then the Nasdaq ETF, it's about $208 US. But when you look at the prices of the S&P 500, because this is not in prices, it's in point, so we can see it's about 4,000 point, and then you need to understand what is the value of each point. If each point is $1, then it means that the cost of this index, it's about 4,000 US dollars. But remember, some people, they trade leveraged product, which then reduces the value of each point. But leverage trading, it's another story on its own. If you know it, you can trade it. If you don't understand it, then it's something that you should by all means stay away from it, because you can easily blow up your account. Right, now let us look at the price of oil. We see previously when oil came back to this level, we were expecting that it was going to fall there. So that was around $75 per barrel. We were expecting the price of oil to come back and retest these previous lows here, somewhere around or just below $65 per barrel. Fortunately, that didn't happen. So now we can see it has been consolidating above that $75 per barrel. So now it is coming back to this previous level, which was the previous support that was broken. So now we are waiting to see where the price of oil is going to go. If it comes back above 85, it can benefit a lot of those energy companies. But if it comes back below 75, then it will sort of disadvantage those energy companies. So there are a lot of energy companies. We mentioned that one of the best performing sector for 2022 was the energy sector. So a lot of those companies, they benefited, especially at the beginning of the year, where we saw the price of Brent crude breaking above that 85 and then coming to test that $120 per barrel before it started to retrace. Even though there were talks of energy shortage in the European European Union, that didn't help the price of Brent crude, as we saw that it continued to crash. But do keep in mind that some people, other than Brent crude oil, there were also talks of natural gas, which is a different product compared to Brent crude oil. So yeah, we can see. Then lastly, we can look at the price of gold. So what we see here with the price of gold, this is another market that performed well. Once again, when it came to this level, even though there was an expectation that it can continue to fall, we can see all these 3 weeks, it indicated that the buyers were pushing the price higher. They were rejecting the lower prices, and then once it broke above this level, it really started to take off. But remember, we have inflation in some countries. They are rising interest rate, so the performance on the price of gold, it could be technical, based on technical movement, but it can also be coming from the fundamental aspect or the macroeconomics or the macro environment, because like I mentioned, we're in a period of, well, depending on where you are, you could be in a place where it's higher interest rate or higher inflation, and that can have an impact on the price of gold, and maybe other fears of what is happening in terms of the economy and the geopolitics. But the good thing that we see that, okay, now the price of gold is pushing high, and this is greatly benefiting gold stocks. In South Africa, we are a commodity producing country, so we do have a couple of mineral or energy, not energy, commodity stocks, whether they are producing gold or platinum producers. So whenever we see a good price on gold, then we can expect that those miners can greatly benefit. I mean, the mining stocks, not the people that are working on the mine. It is a different story with the workers. Okay. So now what we see is that most of the indices are moving up nicely. We're not going to cover crypto, because every time we cover crypto, we end up embarrassing ourselves. So now when we look at the JSE Top 40, we saw that it is green for the year. We saw that the first 2 weeks, we had this spectacular performance coming from just above 67 point and then pushing all the way to 73,000 points. You can remember that you can also get top 40 tracking ETFs. It could be Satrix, OneVest, APSA, Cautious. There are a lot of ETF providers that tracks the JSE Top 40. So we saw that because of this price movement, a lot of the top 40 ETF, they started to reach a new all-time high or a new 52-week high. So what we noted here is that we had this previous resistance level that was broken on the first week of 2023, and then the following week we also saw that the price of that top 40, it continued to move up. So remember, as South Africans, we would like to see the stock market goes up. Unfortunately, there is no direct correlation between the stock market and the economy, but if there was a correlation, we would hope for better things. But we've got other challenges, including the load shedding, so we cannot really count much on that. But other than that, we are happy to see that the JSE Top 40 is moving up. Some of the companies that are leading the JSE Top 40, like I mentioned, that the miners, we can look at AngloGold, Ashanti. You can see it also moved very impressive, coming somewhere around 220 rand per share, breaking above this level at 260, and it has been on an upward stream there. We can see now it is coming closer to this previous resistance level. Well, depending on where the price of gold is going and if the institutional buyers are still buying this, we can expect AngloGold, Ashanti to break above this level. But the other alternative scenarios that the share price of AngloGold, it pulls back a bit. We are not predicting either move. We are just waiting to see which direction AngloGold Ashanti is going to take. We don't have a position on AngloGold Ashanti that is listed in South Africa. We have a position on AngloGold Ashanti in the US, because remember, some of those companies are listed in multiple exchanges. So you can see that the share code is ANG for the one listed in JSE, and the share code is AU for the one that is listed in the New York Security Exchange. Even the prices is different. This one is priced in US dollars. So we missed that first entire move as it happened, and then when we saw that there was that brief consolidation before or at the beginning of the year, then we bought when AngloGold broke above this level. So we've managed to get this move from $20 to about $23. That's a $3 difference. It doesn't seem that exciting, but if you consider that our stop loss is just somewhere around $19, so effectively we have a risk to reward of 1:3. In all our videos, we always mention that we prefer a risk reward minimum of 1:2, but ideally 1:3 is better. better, because if you have a risk to reward of 1:2, then you need a 50% win rate. But if your risk to reward is 1:3, then you need a hit rate of about 33%. So you can be right 3 out of 10 times, and then you can still make money, as opposed to being right half of the time. Then it becomes a bit challenging to make money. But that is something that has to do with risk management. So another company that since we spoke about energy is Sasol. We are looking at Sasol. What is happening with Sasol? Once again, Sasol couldn't come back to 240 there. We can see that now it's just there. It's starting to turn around a bit. From around 260 rand per share. Now it's at 287. So this is our area of interest here. Want to see if it can come back to around 290, and if possible, if it can come back to this 320 rand region. But a move from let's say 290 to 320 is a move that is going to be appreciated, because that can really help relieve some accounts. But at the moment, we don't have a position on Sasol. We don't have a problem with not having a position, because the reason why we exited Sasol, we didn't want to participate as it started to fall here. But now we are keeping an eye. It is a stock that is on our watch list. We want to see what is happening with Sasol. Like I said, ideally should at least trade come back to this 320. Then once start to trade around 320, then we can start to have some buy stop order there, so that you can target a move going to about 420. So a move from 320 to 420 is going to be about 100 rand per share move. So then we will be happy to participate in that move, especially if you can have a stop loss just below 320 there. So remember, you need to plan your trades, and then trade your plans as those trades they start to work out. But like I said, at this moment we don't have a position. We are just keeping an eye on that particular stock. Also Sibanye, we made a couple of videos where we were bearish on Sibanye, and then we made a video when we were now bullish on Sibanye. We even posted on our YouTube channel to say, okay, now we are bullish on Sibanye. Remember, you don't want to be bullish and not take a position. Whenever you are bullish, you should take a position. So we bought Sibanye as it came back around 48 rand per share. Well, that position, it started working nearly almost immediately before pulling back, but our stop loss is somewhere around 42 rand per share, so it never came to touch our stop loss. Now that position is somewhere around 1.65 rand. So the position at the moment, it is moving on our favor. We are happy that we have Sibanye, but we would like to see if the stock can come to 63. We don't actually have a take profit. This is just for illustration, so that we can keep in mind where is our stop loss. We can easily look at that. But as long as the share price is going up, then we can hold this company. In the past years, Sibanye has been paying dividends. We're not saying that it is going to continue to pay dividends, but if it does continue, then there's also that reason that as long as we are holding and the stock is on an uptrend, then we can continue to receive those dividends. So we are happy with that position. But it's not only Sibanye that is benefiting in the platinum group sector. There are other companies. I'm just trying to think of another platinum company, right? You can see Northern Platinum is also trying to move up. There is also Impala Platinum, which is also been moving up. Remember, for us, there is no need to invest in Sibanye and Impala. Yes, there are different companies. In addition to platinum, they produce other different commodities. But if we start to feel strongly about a sector, we know we cannot buy all the companies within that particular sector. Then we start to add ETFs, which tracks that sector. Because remember, it doesn't matter whether you have 5 or 10 stocks. If you are up 20% for the year, it doesn't matter where that 20% came from, whether it came from 5 companies or it came from 20 companies. The only thing that you're going to get when you have a lot of companies, you are going to get a lot of dividend payments. But remember, the amount that you receive in dividends is relative to the amount that you invested. So if you spread your capital across 20 companies, even though you're going to get dividends 20 times, but the amount of dividends that you are getting is also going to be equivalent to your contribution in that particular company. So for that reason, we prefer to have a concentrated position wherever we are taking a position. By a concentrated position, ideally we want a position to be at least 5% of our capital. So we're looking at Woolworths. This is a position that we took late last year. What we noted, we saw that Woolworths was coming back around this level here. So when it broke above this level, it was around 64 rand per share. We started to take a position on Woolworths. That happened nice with that big volume, and then you can see it started to consolidate. But the nice thing is that the volume has been drying up. The buyers and sellers, they were all disappearing, and then last week we saw that the stock, it came back to this level, and then it broke above here with this candle. Even though that volume is a bit higher, it is not greater than the 50-day average volume, but we're still waiting to see. We have this position. It's one of our bigger position in our portfolio. By big, I mean that it is significantly larger than the ordinary 5% that we always take. So we are watching, we are keeping an eye in this stock, but it is not the only retail stock that is performing well. We know that Shoprite is one of the companies that people like in South Africa. We don't have a position on Shoprite, but you can see that it has been forming a series of higher highs, and then there was this nasty pullback that came back to trade below this previous resistance level. So at this moment we don't have a position. We want to see Shoprite coming back above this level first, then maybe we can consider taking a position on Shoprite. We can always miss some companies because we are not just interested in being shareholders of a company. We need to make sure that whenever we're in a position, that position is working in our favor. So we mentioned that the market has been strong. One of the companies that we can attribute the strength of the market too is Naspers and Prosus. Well, remember that Naspers owns Prosus, so Prosus is a subsidiary of Naspers. If you buy Naspers shares, you actually co-own. Well, you're not getting shares in Prosus. Prosus is part of Naspers, but if you buy Prosus shares, then you don't get all the companies that are remaining in Naspers. So what we saw here, there was this move coming from just around 1,600 rand per share, and then the share price, it broke above this level somewhere around 2.6. We bought it when it was just breaking. It was still below 2.6. We were looking at this consolidation. We took a position that has worked well so far. So now we are looking at this resistance level there at the top. We still have half of that position. We are waiting to see if Naspers can start trading above this level. Depending on the strength of the market, then Naspers can easily trade above this level. But if then the buyers or the sellers, they start to step in, they might actually push the price a bit lower. So we're not sure whether now. We're just going to wait and see if the price can come back to retest this level before pushing upward there. So from here around 2.5 coming all the way to about 3.3, we have locked in half of the profit there. We will be giving that update on the 10,000 rand stock trading challenge, and then we're going to see how we're going to manage that position moving forward. But half of it is closed for profit. And then we also took another swing trade position on Prosus, because remember, we started with a position on Naspers, and then as things started to turn, then we also looked at Prosus. So we bought a Prosus when it crossed above this level. Then we were looking at a daily chart. The daily chart, it's much more clearer. When you look with the benefit of hindsight, we should have entered somewhere around 1.2, not above 1.2. Otherwise, we're still happy with that position. We can see that it is also at this area of value. So we're also waiting to see if Prosus can start trading above this position. This is a new position. We still have that full position. We haven't taken any partial profit from it, even though the position is on profit, but it does not justify taking some profit there, because the risk to reward at this moment is almost 1:1. So that is not a good way of trading. It's not going to be beneficial to us in any way. So there are a lot of other companies that we spoke about, that we touched on. Another company that we traded, we posted some, was CFR or Richmond. So now we are waiting to see if Richmond is going to break above this level. As you can see, it is just that previous resistance that we saw early or late 2021, early 2022. So if Richmond trades above there, then we can take a position. But what we ideally what we want to see a brief consolidation there, with the share price breaking above the consolidation level, because then that will give us a decent area to put our stop loss. But it is something that is on a watch list. We are not worried much about. So I think that's it that we can cover today. Again, if you have any questions, just leave them, or if you have any recommendation, a company that you would like us to cover, just give us there. And then lastly, on the JSE, we are looking at MTN. You can see MTN has been moving sideways since somewhere around June 2022, coming all this way up. So we're waiting to see if MTN can trade above 140 rand per share. If it does, then we can take a long position with the stop maybe just below this level, and then try to see if it can come back around 210. As you can see, that will give us a great risk to reward. It is something that we are waiting to see. So the video is already long enough. We appreciate everyone that has been with us thus far. We're going to make a separate video covering individual US companies this coming week. What we're expecting in the US, we can see that they call it an earnings season. So some of the companies will be paying, some not paying. They will be coming out with a result. So depending on how those companies have performed, they might or might not declare dividends. So we can see there is banks, Morgan Stanley, Goldman Sachs. These are the bank stocks. Some of these banks have done well, at least in the last quarter of 2022. And then there are different companies. Okay, Charles Schwab is another investment bank. Alcoa, it's an energy company that has done incredibly well in year 2022. So we're expecting Alcoa to declare a dividend. We know Procter & Gamble is one of those household companies. People love it for its dividend payment. So it's one of the results that we're interested in. Netflix, it's one stock that got hammered, but just before the end of 2022, it started to recover. So we're expecting Netflix to continue to recover. Or let me not say we're expecting it, we would like to see Netflix continuing to recover. So these are some of the companies that we'll be interested in going to the week of January 16, 2023. And then we will be covering some of these companies depending on what is happening. As you can already see, there's a comment there, somebody saying that Netflix is on number one watch. Yes, it is also a company that we're interested in, but we're mostly interested in Alcoa Capital. So that's it for today. Don't forget to subscribe so that you don't miss that US stock analysis, because we'll be looking at different companies in the US and then seeing what we can find there. So that's it for today. We will see you in the next video.